Okay. So last topic 6. So how we're gonna do this is we're basically gonna recap a quick recap of the first 5 topics that we did, and we hope you guys have taken value from this. And if you have any questions regarding any of these topics, please do message us to make sure that we have delivered the understanding. So topic 1 was the first week that we talked about price merging, kind of merging, understanding buy to sell and sell to buy. So those we were basically teaching you what to see, your buy to sells and sell to buy. So there's so many variations of this, and we basically try to simplify it to make sure that you understand that price can be candles can be merged, the open and close, to get the whole open, or to get the whole leg of buy to sell. So that was your the first topic itself. So the market behavior is simply how market sells at a loss to then buy back up. They buy back up to then come and mitigate to protect your orders. Now this is your potential target. And this is now your protected, this order now gets protected to then continue. At the same time, liquidity got built whilst it's going down like that to then get targeted. So this was your contained price here, and price initiates out, protect. So pretty much everyone now should understand this is your template itself to understand how price behaves. And topic 3 is simply following money itself. So this is following your buy money and meeting your targets here, and then your sell money is simply the opposite. So that's just simply following your mitigation. This is a very raw basic things. And your sub ranges and your low time frame ranges, session high, low, equilibrium, is simply your whole range. So this is your potential buy range here, and price comes into this sub buy range, and you see that reaction, and people can potentially play this region here to mitigate, to continue to target this. So these are your ranges, and what people this is what should be understood with ranges. With the sells, it's just the opposite of this. And equilibrium, premium discounts, you should know already that this is your equilibrium, discount price, and premium. And within the sub ranges too, you can see the same thing: premium, discount, equilibrium. And with topic 5 is basically gathering the whole information. We teach you what to see and what to understand from what you see already from topic 2. And then topic 3, understanding how price flows. And then topic 4 is the ranges. Topic 5 is looking at the higher time frame all the way to the lower time frame to understand the whole picture for you to then execute on the lower time frame itself. And then
executing.
Someone didn't enter into position in it. And and then asking the right questions, like when price does comes into that lower time frame region, like asking why did it emit, what is actually happening from the high time frame itself, and knowing where you are on the high time frame, and then scoping in on the lower time frame to know where you can potentially place yourself. And ideally, with when volatility increases, and you can see that around pre-London and London time, and around just session times, basically. So those are the topics that we went over, and from this, you should be able to start understanding what's the intentions for banks when you're coming on the screen in the morning or New York time, so you can position yourself around that time. So topic 6, this is the last final topic. So stress testing, finding your own flow, examine, understand, simplify, execute. If people didn't know that already, that is basically use. It was a definitely an interesting thought when I came up with that. So something to just keep it simple at that time to understand. I thought that was your answer. Who said that?
Nick.
I mean, is it? I don't know.
You use, right? Or did you just
examine, understand?
Like I'm definitely called M from birth. I came out of the womb called M.
Phew.
That's it.
Welcome.
So yeah, welcome. Yeah, so basically, before we even start this, we are aware that this is the final topic, and if there are like future members in the future, because they'll be entering this, and they'll have the topic 1 to topic 6 release. So we are prepared for anyone who for you guys that are watching, the course resellers, we are prepared. So just a heads up. So good luck if you are trying to release this. So because we know how toxic this industry is, so
Yeah.
we know that this scenario could happen.
Let's just say it's the 20 easiest bags we'll ever make.
Yeah. So so let's actually get into the topic 6 itself. So what do we mean by stress testing? Like for me, when I came up with the idea or word, is something that I related to my previous experience, which is in engineering. So we used to I did like engineering in uni, and then basically we did a lot of experiments like tensile testing, and just testing a software or a hardware or just a piece of metal to see how much it can take. You know what I mean? How much stress can it take? How much force can it take? And to see like how it can cope. And from that, you can see like you can manage, like you can know where the safe zones are for that test itself. And that's how I came up with the whole stress testing. Like unknowingly, I didn't know that stress testing was an actual term, a financial term too, the banks use. So let me actually pop it up quickly. All right, let me get this definition here. This is actually a really good definition. Nice one, Wikipedia. So stress testing is sometimes called torture testing, is a form of deliberately intense or thorough testing used to determine the stability of a given system. So in relations to this is your logic and your ideas from what you've understood from higher time frame to lower time frame. And it involves testing beyond normal operational capacity, often to a breaking point. This is very important in order to observe the results. So why do we do this? So to determine breaking points or safe usage limits. So this is an interesting thing to how it can relate to like your risk management side. So, and then to confirm mathematical model is accurate enough in predicting breaking points or safe usage limits. So similarly to relation to risk management and the actual logic itself too, like, and then to confirm intended specs are being met, to determine modes of failure, to test stable operation of a part or system outside standard usage. So this is in relation to stress testing itself in general anyways. So let's actually look at what the definitions for in the financial side anyways, which I was unaware of prior to this. So the way they defined it was, they said is stress testing is a computer simulation technique used to test the resilience of institutions and investment portfolios against possible future financial situations. So such testing is customarily used by financial industry to help gauge investment risks and the adequacy of assets, as well as help to help evaluate internal processes, controls. In recent years, regulators have also required financial institutions to carry out stress tests to ensure their capital holdings and other assets are adequate. So the way they see it is, after that 2008 crash, is they realized that they needed to stress tests to make sure there's enough liquidity for them to run the market continuously, so everyone doesn't get burnt. With this is such an important thing. When I read this thing here, stress testing for risk management itself, like companies that manage assets and investments commonly use stress testing to determine portfolio risks. This comes into that risk management, like what do we mean by stress testing? Like, can we like they said, they can place any hedging strategies necessary to mitigate against possible losses, which is interesting, like something that I was completely unaware of this. And when I read this, I was like, this is definitely tied into what we do. So the way we what I personally did when I stress test is any ideas that I had at that time. If I see, you know what, let me just pop up a chart. So yeah, so let's just keep this to this example here. So for example, if any idea, this is live data right now, any idea that I had, I'll be like, okay, if this is creating lower highs and then this mitigate this, what did this mitigate here last? And this is liquidity. Like, my question is this here gonna get protected? So I'll potentially play it. And then any ideas that I had, like even this one here, got that range bar here, potentially play this. And then I'll, and this here, come down here, and I'll potentially play this hedge here. So I'll just be, any ideas that I have at that time, I would just run it through and then see where the logic actually holds up to. And then you start realizing that if you are doing that at that time, you'll be like, okay, I'm just zooming in too much. You know what I mean? Like, what is actually happening here? And you start zooming out and start getting a better picture of what is actually happening. So that is just gathering data from higher time frame all the way to lower time frame. Like, we start realizing that you have to pay attention to higher time frame regions to make sure that the full intentions are understood from a high time frame perspective. So have you got anything to say with how you stress tests?
In terms of stress testing, for me, stress testing, I was actually mentioning this, we were talking about this just earlier, is that stress testing, it doesn't just involve technical analysis, as in Yeah, you're playing your logic onto the chart and you're executing with confidence, blah, blah, blah. But the thing with stress testing at the same time is for you to build your own system of risk management and trade management. This is actually the reason as to why we don't teach it, because this kind of ties into topic 6, as in finding your own flow. So for me, the best way to like stress test itself is having that system in place, and at the same time having that logic in place as well. That way you actually start to find your flow. So if your risk management, your trade management, and your technical analysis is all, those 3 things are in harmony, then that's actually where you start seeing rapid progress. So for me, that stress testing that's where it actually plays the biggest role for me anyways. That's what I did, and that's why we're here.
Yeah, exactly. So if we were to compare this to backtesting and forward testing, like backtesting is a funny thing, because some people like backtesting. Some people use the replay bar to like backtest, right? Like, what do you truly like? Let's be honest here. When you do use a replay bar right now, yeah. Say for example here, you're like, okay, this is a potential sell range, and I'm just gonna replay this right now. I want this to mitigate here, to potentially continue here or something. Like, what are you trying to do? Is this even live data? You're not trading live data, right? You're just back testing how what the next candle is. You can't, the thing about back testing, you can't see the intensity of how no emotions in back testing, exactly.
Mm-hmm.
Like, you can't see the intensity of how price moves aggressively at that time. Just imagine this was a 1 minute. Say orders were filled very fast, you can instantly know that, that's aggression. It just mitigates something. And say it mitigate something and then create a V shape straight away. You can see how the orders moving on bus. Yeah, so you can see how they fill the orders very fast at that time. So that's the thing that you can't get out of like back testing itself. Yeah, intensity, exactly. Yeah. So
one main thing to mention
what were
here
your
as well is
biggest
like,
lessons? What was your biggest lesson like while stress testing? You had, of course, some obstacles you got.
I think
Could you share a little bit about that?
I mean, I will share you. So I'll talk to you about more about when I say back testing too. Like, I really don't like the word back testing at all. Like, you should be looking at the data as it is. Like,
it defeats the purpose of stress testing. That's what it does. Stress testing involves for you to be in the live market. Back testing, you're not stress testing. You're actually just watching this movie. Like, you're just viewing candles for no reason. That's what you're doing.
Yeah. So one thing to add,
for me personally,
I'll clarify this a lot further. So for me, with like back testing itself, you shouldn't be looking at back testing. You should be looking at what the historic information, the data that has been printed already, and from there you can see how they move price, right? You can see, you don't need to like replay this, and you can see how, okay, this is how they move the price. They bought to sell, protect. This is how they move price, and intentions were maintained for lower prices. Like, the way I did it in the beginning was I looked at monthly. Like, why did I look at monthly? Because you can see the true history of price, right? All the way back to where TradingView actually recorded the first time EU for this FXEM chart. So this is very interesting. Like, when I saw this, when they open price here, they start dumping here. You can see how there's a reason for them to come up, because there's an efficiency here. And look at how they reacted to that edge money here. And you can see how this range bar got created to then protect, and aggression came out. And you can see how they move. And this now liquidity gets taken. You see that? And then that sell to buy. Like, I was looking at this as in the data itself. I didn't look at it as in like, oh, I want to like replay this and I make sure that, okay, that works there. If you want to do that, you have to go forward test. But this here, you can improve your understanding on how they move price itself. You can see how this inefficiency that they left. Like, look at the aggression they left. liquidity that they had to then fill that, causing that V shape to protect this order to then continue. You can see how they move price. So this information itself is like for you to take away and then start applying for the stress testing. So that's what we what we mean by how I look at the history of data. I look at the history of the data just to understand how price behaves around a certain region and how they actually move the candles one candle at a time to make sure that, okay, this candle is moving because this has liquidity sitting here to then start targeting, and then that mitigate here to continue. Efficiency fill. You can see how they move. Once you start understanding this, you're actually training your subconscious to know that, okay, this is how they move. When I see that in the live data, I'll take that information away and see how they move the same way. And they've been doing it since forever. All your Black Swan events have been the same. They move the same way and they give you re-entries around those times. So it's amazing to see that. Because when you see like insane crashes and you think that that's just a crash, but they did give you re-entries for you to enter. So to me, I always find that, like, I think for me, from that moment, I think when I went to the 2008 crash or any crashes, the Corona crash, I found it very interesting. I was like, no way. I couldn't believe it myself, you know what I mean? That this is actually a consistent thing that they do. Like they've been moving money since then. And if you truly understand that and you understand how they move money like that, yeah, you can start, and then you understand that how prices are fractals. Prices are basically it's a fractal nature. Take it away all the way to seconds, and you can see how they move. Like this, just to me, when I saw this, I was like, I can't believe it. I was like, oh, they give you re-entries for the shorts, and from there I was like, oh, that was my the confidence that I took from just looking at these past data and just making sure that, oh, this definitely is it. Like, this is how they move money. So okay, so what is it again? So with forward testing is something interesting when you forward test. Like, forward test is a bit too light of a word. I personally just don't prefer. I just like that that stress testing, because every idea that you have, you're just throwing. You're having like a burner account, and okay, just tap into this edge money, cause that V shape, and this is liquidity. Okay, let's see if this plays out. And then once you start playing out start taking all these entries, you start realizing like, oh, only a certain few works, and then you start finding your own flow, and then you're gonna be like, okay, ranges. I'm really good at range now, so when it comes to range, I'll just play the edge and I'll take that. So you start finding that you're good at seeing, training your eyes to see ranges, and then say you're good at momentum shifts, you can just start focusing on just getting into those momentum shift itself and then seeing where it can target to. And then continuations is the same. Like, if you're good at, you start finding you understanding continuation, you just start taking continuation itself, and then you start understanding the true where you start being more selective with your trades, and where you see that where it's truly worth it, like which trade is actually gonna give me that decent percentage. So that's what we mean by finding your own flow itself. You got anything to add, Em?
I see it as a means of, like, think of it kind of like not I don't want to say natural selection, but kind of like you're basically eliminating the bullshit when you come to stress test. As in, when before stress testing, you have all this knowledge and you have all this thing and logic that you want to exercise onto the market. And through stress testing, you start to refine it and start eliminating the bullshit, basically. So at the end of it, it's kind of like, basically stress testing allows you to refine your system and find your own flow. That's why I think it's so key to stress test, as in, if you don't, those the bullshit that you have stored away in the back of your subconscious mind, that's not going to get eliminated because you're not really exercising your logic. You're not getting to see those losses through the weird information that you have stored away. So through stress testing, you start finding out what works and what doesn't work. And after you know that, you can take that information away to then apply it to your trades. And then you can apply a trade management system, risk management system. From there, you actually start seeing the whole puzzle put itself together. That's pretty much what I have to add from there anyways. So that's the importance of stress testing for me.
Definitely, yeah. It's for me, yeah, it's definitely a key thing to do, because when you're trying to understand the concept itself, you realize that you have so many ideas and you just want to play it. You want to see if it plays out. You should play it out. You know what I mean? You want to if you want to see this sell to buy getting played out, play it out, see what's up. And you get closer to this region here, you want to see it playing out, play out. Let's see if it plays out. And then when it starts taking you up, why you have to ask yourself, why did it start taking out? What did this actually mean? Look at the effort itself. So with this information itself, the information that you gather from stress testing, you do start becoming way more selective with your trades, and you know that what's worth your time, like positioning yourself like during pre-London, London, pre-New York, New York, and positioning yourself at like high time frame, like POI regions, not necessarily like 4 hour 1H. Ideally around like 15-minute, around that session time. Normally around session time, they always position yourself quite close to high time frame regions anyways. So yeah, I think that's
another thing to add as well. When it comes to stress testing, say you're following your mitigations. Let me annotate this. So you're buying your mitigations. Every mitigation is getting mitigated to continue higher. And once it fails, that's where, when it comes to stress testing, the main thing to take away in the beginning of stress testing is your losses. What can you learn What can you learn from your losses? So each trade idea that you have needs to be backed by very strong logic, as in these cannot just be random buy to sell, sell to buy that gets mitigated to continue. It cannot just be something as simple as that. It needs to be backed by proper logic. So if it does get taken out, that means that your logic didn't get played, as in your logic didn't come through. So that tells you that something was wrong at that time, right? As in it didn't play out, so something obviously went wrong, as in market proved me wrong. So now I need to learn from the market, as in what did the market actually do? This is where it ties into market being your mentor. So through your loss, you can actually start seeing like what wins and what doesn't win. It doesn't become about losses anymore. It actually becomes about what does win.
Yeah, you start focusing on the winners itself, because at the end of the day, you want the market to just be your full mentor, because all the answers are right in front of you. They show how they move price already, so you have to position yourself like that. Finding, so your next the next bit is examining use itself. Use
and how this ties into stress testing itself, as in these are the 4 steps that you need to carry out in order to have, like, this is what should be backing up every single trade. Did you understand? Did you examine? Did you understand? Well, this is up to you, but did you simplify? And did you execute? These are the 4 key components of stress testing itself, as in this is what's needed for your logic to be strong.
Yeah, exactly. So what do we mean by examining? What we mean by that is, are you scrolling through every single time frame from high time frame all the way to your lower time frame? Are you understanding what's actually happening on the higher time frame, from the monthly to the weekly to the daily to the 4 hour and the 1 hour? And all the way down to the 1 minute itself. Are you gathering all this information? Like, are we questioning ourselves, like where are we within this region here? Like, where are we here? Are we questioning like where is liquidity? You can see liquidity there. Where is liquidity?
Mm-hmm.
And where is potential regions where it can bounce from? Like what is my ranges? We had a buy range here that we had, and this mitigate here.
So one thing I wanted to add was that when it comes to examining, what is the purpose of examining? Examining actually allows us to, once you have all the information that you need, then you can start applying your questions. So as we mentioned before, it's not about the answer, it's about asking the right questions. So you can only really ask the questions once you have something to question, right? So that's why we cycle from every single time frame. We use every single time frame towards our advantage, so that we have things to question, so that the market can give its answer. That's the actual reason behind examining. I mean, you can even look up the definition of examining. What exactly is examining? Examining requires, well, noticing every detail there is to notice, being aware of everything that's going on.
Yeah, and bring it down to all the way to the point where you want to enter, knowing that which sub range you are at that time, to make sure that you truly understand where we are at that time.
Because through true understanding, that's actually how you build your confidence, because fear blocks your intuition. And what causes fear? Fear is actually a lack of understanding that causes fear. So when fear is in the brain, your intuition is blocked. That's where your ideas stop flowing. So that's why it's so important to first examine. That's the first step.
Exactly. So like with simplifying, what we do is, for me, it's just like, I simply just look at
understanding
the high time frame regions to simplify where it can potentially go to. Like this morning, I know that this inefficiency was here, and this is potential liquidity, and this is my potential first target here. I know that already. So what do I do when I bring this information down? What do I want to see? I want to see every your sell to buys getting protected, simplified to that point where I fully understand what's actually happening.
Simplified the region of interest, simplified your liquidity, simplified what the intentions are after coming into your region of interest, simplified what range we're playing in, and from there you start executing. So once we simplify it down, simplification doesn't necessarily mean that you're losing data. Like, you're not losing information, you're actually refining it down to you're purifying your data. That's what it is. As in, we know this is a region of interest, and after here, what do we want to see? Well, what did the banks show? They showed interest in high prices. So from here, what do? We know there's liquidity for high prices. We simplified that. So now we simplify it down to your executions. This is where we bring in the range. What's our range? And within that, we simplify down to what's the last region that they want to mitigate, before they continue higher. That's all it really comes down to. It's like, first you examine your data, then you understand what's going on. Now it comes down to simplifying. And then now we'll talk about the last step of the process, the most important part of every single part of the process is important, but this is the one that makes it, which is your executions. Your execution. How do you execute?
Yeah, I mean, with execution is with the thorough stress testing and all that, you start realizing that, okay, I'm only gonna start taking trades that are close to like sessions and high time frame regions that just cause a momentum shift. And then, or I want to start taking continuations, or I'm only gonna focus on trades that are in range, because I understand that it's what you truly understand that you can execute with confidence.
Your flow.
Yeah.
Which is your flow.
So yeah. So once you truly find your own flow with like the trades that, so you're the kind of trader that likes stacking, or you're the kind of trader that likes hedging, you're the kind of trader that likes a momentum shift, you stick to what you're good at, and then keep hammering that till you get better and better. Because once you do that range, you start moving on to your weaker parts, like your momentum shift and continuations. So you basically break it down for you to make sure that you understand aspects of how banks move their price, and from there you can understand the whole thing, and then you can start executing with confidence. Because at the end of the day, you don't want to hesitate when you press that button or put that limit. You want to know that, okay, I know what's going on, and I know that I have the confidence and the ability to see this trade pulling through. So that's
the way I see it is that when it comes to, again, going back to stress testing, think of it like you're building your base. So within that base, you have your weaknesses. So when it comes to stress testing, you're building on your weaknesses, as in you're sorting them out. You're strengthening your base itself. After you've elevated from your stress testing phase, then once you know your winners and you know your strengths, you start actually focusing on now the strengths. This is where you start specializing in what you're best at, your flow. This is what it is. So first, you have to build that good base. You have to build a strong base. This stress testing can help you with. After you've built your strong base and you've hammered down on your weaknesses and you've identified your strengths, now you take that and now you start focusing on your strengths itself, as in like, what am I best at? What can I do best? What do I do best? Am I good at stacking? Am I good at identifying zones? Like, basically you want to be good at everything, but what exactly are you good at? So from there, you start hammering down on your strengths and you can see insane progress from there. As in, I mean, we know this already, but when someone specializes in something, they're really good at that one thing, or, you know, it could be a couple of things, but that's basically what it comes down to, as in, what is your strength? So your strength can be your eyesight, which you build through stress testing. So once you have a really good eyesight for the market, that's all it takes. Now you can start executing with confidence, because again, what leads to confidence is understanding first. So that you can achieve through stress testing, understanding what works, what doesn't work. After that, once you know what does work, it gives you confidence in applying those things and seeing if it does work or not. So that's kind of how everything ties in together towards making you the best, continuously being the best version of yourself. As in, it's a very deep process of self-reflection, stress testing. You have to be very self-reflective.
Yeah, because at the end of the day, who actually press the button is you, right? So it's you that build the logic. It's you that piece all the information together, and it's you that's waking up in the morning to prepare yourself to take a trade. So make sure that you're sharp, you know what I mean? You always want to be sharp in the market, because when price does some fuckery, like, what are you gonna do? Are you gonna stop trading at that time and just look how it moves and go from there, or are you gonna continuously trade because you just have your trigger happy, a trigger, you have you got that trigger finger, so you just want to keep pressing? Or what's the best thing to do at that time? You know what I mean? These are the questions that you do realize when you start trading, and you want to basically focus on how to actually build an account itself, and how to actually protect your account and build it continuously. I mean, with high R trades, it's a blessing. You know what I mean? It's a blessing, because it's you don't catch that 2R and 3R anymore. You know what I mean? You're not that retail trader anymore. I mean, we're still retail trader, but we're in a sense where our skills so refined that we can catch high percentages that are just mind blowing sometimes. You know what I mean? So yeah. Questions. I think I just saw a question here. Do you guys read a lot of books and meditate, etc.? Anything external of trading to your it's funny because I think I just kind of like personally for me, I become I'm I'm really blunt and honest with myself. Like I ask myself, like, why are you not, like, to myself, I'm like, why am I not progressing at that time? Why am I not doing this right? And I will honestly answer to myself, like, okay, this is what I need to do. I need to do this, and I need to just do it. And that's it, really. Like making sure that your ego is let go, and then just know that you are wrong, and then find a way. Always find a way, and just keep finding out. It's something. The click is such an interesting thing, because was it really a click for me? Like I think it was just a natural progression rather than a click. Because
a click
for me,
is implying that it kind of all came together at one random.
yeah.
But this is through like continuous progress, you know.
Yeah, continuous like perseverance of like, you know, that you spend this much amount of time already in trading, and you're like, should I just let go, or should I just keep continuing? Because if I let go, I've wasted all those years. Or years are like, it's a heavy word when you say years, you know what I mean? Because that's like, am I gonna go back to what a 9 to 5 that people want to do, you know, like people, a lot of people do. But for me, I've spent so much time that I don't want to go back to that, and just continue push myself. Because I mean, a lot of you guys probably
in terms of like external ways of trading. I mean, you play chess blitz mode.
Yeah, external. Yeah, for me, I used to play chess blitz mode to get the speed, to practice speed, and it practices your logic too at the same time, with like thinking of like multiple scenarios at that time. Because at the end of the day, it's the multiple scenarios at that time that you have to be prepared for. If price does this, how are you going to prepare yourself for that? If price does that, have you prepared yourself for that already?
So basically, you're playing chess with the markets.
Yeah.
Market makes it, then you make your move. What are you going to do?
Yeah. So, but you practice. When I play blitz, I practice that with speed. So that has improved me in terms of like very quick critical decision making. And funny enough, I haven't played since after that. I think I've definitely got the hang of the market itself. So
for me, in terms of like books and meditation and stuff, the only recent book that I read was Principles by Ray Dalio. That's what I read last. Other than that, I don't personally really read that much. In terms of meditation, you know what's up, 420 every day. But anything external trading to improve your trading, basically just like being a very, like E has mentioned already, being a very blunt person with yourself. As in, at the end of the day, you are your own mentor. You have to be self-reflective. You have to look deep within and identify things. This kind of relating back to the book that I did read, it was like the first step of solving the problem is identifying the problem. And you have to be very self-reflective. You have to be very much of a critical thinker in order to even admit your own flaws, because it's hard. Like when you're stress testing, or when you're going through this process of stress testing, when you start incurring those losses, you ask yourself, like, why is this not working? So instead of like beating yourself up for it, realize at the same time that's an opportunity for you to understand a solution. Like that's what it is. So I remember back in the, not back in the days, but not that long ago, but me and E, we just sit down and we just like talk about these things, and then we're just like getting these eureka moments of like, oh, that's what you do, because we're so self-reflective, as in like, what's going on, what's the problem, what's the solution. We're so adamant on identifying the solution itself. So it kind of just comes down to you being a problem solver. Like if you have that personality of like problem solving, critical thinker, and just not giving a fuck, then you know that's actually what helped me anyways. Because for me, I had that thing as well of having paralysis over analysis. So what took that away was just saying, fuck it. Like, you know what? In order for me to improve, I just have to do this. That's the realization I had at that time, is that if I'm not taking these trades, there's no way I'm going to improve anyway. Like, so might as well just do it. So through that continuous, repetition of finding what works, what doesn't work, what I'm best at, what I'm not good at. That's how we got here. That's really it. It's really understanding yourself and being self-reflective and improving on your weaknesses and strengthening your strengths. That's what it comes down to.
Exactly. I mean, if people ask to us, like, do we still do markups? We don't do it anymore. I mean, what's the purpose of a markup? Is for you to understand the historical data and to see how they price behave and move, and how they move it. So
we know those elements now.
So. So at this point, we know that already. So we just look at the price as price now and go with that, really. Since we only trade one pair, it's just a lot easier. You don't need to what I did like 2 days ago or 3 or even last 2 weeks. So it's a lot easier.
Even back in December, to be honest,
even to the point where we were losing a lot. That distribution phase. Let's go back to that.
That was a funny one.
Funny how its prices was around that place. It was around this region where we thought this was this distribution. Just POI trading, like every we just POI trading. That's when up trust and then sweep and then
this is my LPS. I don't know. Fuck knows, like random ass names. Just like what's going on.
We thought this was gonna complete short, and then look at what it did. Like we then realized later on, this simply mitigate this range bar.
Basically, not understanding what's actually going on. How is price moving? Like, what is the intentions? Because we didn't know intentions like that. We didn't know what intentions are, because intentions were clearly to continue higher. So that actually could have been read through what they showed, but obviously through the whole a schematic Google image, like this is how market works. No, that's not how it works. Like, market is a lot more deeper than that. You have to go deeper in, as in you have to understand how price moves itself. And it was something that we always looked towards even before logic-based trading itself. It was like, at the end of the day, we want to be able to just trade with no indicators, no nothing, not a single line, not a single 618 insight, just price by itself. That's all we need. And thankfully, that's the level where we're at now. And you guys are getting there too. So, I mean, you guys are on track. Just, again, this is where topic 6 comes in. Now is the time for the stress testing phase. So this is why we thought that it's a good time to introduce your wins and your losses channel. So from there, you guys can just improve seeing other people's wins, losses, stuff like this. But we'll need more to do that.
Exactly. You can learn from each other too. So it's a learning space, and we want just a positive learning space. That's what we want, and we want people to just be confident in their own abilities and proceed from there, really. And I remember that exact magic how we view it in WWE. Honestly, a lot of people probably thought this was distribution. So,
distribution schematic. It's like, man, the fucking monthly is like longing. Where is this gonna sell? It's not gonna sell. It just comes down to understanding. That's all it is. And you build again, to tie it in, your understanding builds through repetition of you getting up every single day, doing it over and over and over again. Not just through quantity, but through quality. As in, are you making sure that those losses are even worth it? Are you learning from them? Are you learning from your wins? Are you learning from your losses? That's what it comes down to. So to build that understanding is such a peace of mind to know what price is doing. Like, before this era of, this whole SMC wave, people just didn't even know what's going on. Like, you see a trend line and you think that's market. That's not market. So, I mean, it just comes down to understanding. Once you have your understanding, leads to confidence. Confidence leads to execution. Execution leads to Ferraris and Lambos and all that. Private jets, what's up. What do you guys drive? The market, man.
We drive the market. That's it. the 1 second.
We got you crazy.
Yeah, we drive EU crazy. Honestly, sometimes I just feel sorry for EU. I'm not gonna lie.
Yeah, I'm just like, man, I'm thoroughly rinsing EU right now. I'm touching it